This is a training session regarding setting up federal and state tax tables. First, we pull down the Setup menu and select Accounting Options, Payroll Options, then Federal Taxes. Here is a window that allows us to enter federal tax information. First, we have a federal ID number. This is unique to each company that must withhold federal income tax from employees. We next have the GL account that will be used to store all the federal tax withheld from employees until it is paid to the federal government. This is the personal exemption amount. It can be found on the annual federal tax publication. This box should only be checked if your company is a railroad company. It allows access to additional withholding and accrual classifications specific to the railroad industry. Here in the Social Security group, we can enter GL accounts for Social Security amounts deducted from employees and the matching amounts accrued by you, the employer. You may enter the same account number in both fields if you desire. This is where you enter the rates for the employee portion and the employer portion of Social Security. Here is the wage limit for Social Security accruals. It changes almost every year. This is the Medicare group. Here we can enter GL accounts for Medicare amounts deducted from employees and the matching amounts accrued by you, the employer. You may enter the same account number in both fields if you desire. This is where you enter the Medicare rate. Here is the wage limit for Medicare accrual. Currently, there is no limit for Medicare accruals, so the field should be left blank. These two fields apply to the additional Medicare tax imposed on employees who earn higher wages. Enter the percentage rate here and the wage minimum here. Here in the unemployment group, we can enter a GL account for federal unemployment tax amounts accrued by the employer. This is the unemployment rate, currently 6%. And this is the wage limit, currently $7,000. In this section, you can edit the tax withholding table rates for single and married persons. Taking the minimums and percentages from the Federal Tax Circular Annual Table, you can update these figures as necessary. The last three fields are for the single and married standard deduction amounts and the non-resident alien adjustment. Since these rates and minimums are universal for all U.S. employers, A Systems keeps the rates up to date and has them available for download using this button. When we click the button, the system displays all the values needed for this window. On the left are the values currently stored in your data files. On the right are the values updated by A Systems. If any of your settings are incorrect, they will show up in red. To apply the updated values, just click the Proceed button. Your values are updated accordingly. Now we'll save our entries by clicking OK. Next, we'll pull down the Setup menu again and select Accounting Options, Payroll Options, and State and Local Taxes. Here we can enter tax table and accrual information for as many states as we need. For example, we are going to edit the state of Oklahoma. First, we can pick from a list of state IDs, and the correct state name will be displayed. We can now enter our company's state tax ID. Here we indicate whether this state requires employers to withhold income tax. There are some states in the Union that do not require withholding of income taxes. If this box is not checked, many of the options below will be disabled. But if it is checked, we will need to set up our tax table information. First, we specify a general ledger withholding account. This account will be used to hold all the withheld Oklahoma state taxes until they are paid to the state. We next indicate whether the tax calculation rate is based on the employee's gross wage or their federal tax withholding amount. We then indicate whether standard deductions are calculated as a flat dollar amount or as a percentage of the person's gross pay. Different states allow different methods. We next indicate whether exemption amounts are subtracted from the person's gross pay before tax is calculated, or from the amount of tax after the tax has been calculated. We then have a few checkboxes here at the bottom. One of them indicates whether the system will deduct federal tax before using our tax calculation tables to calculate the state tax. This one indicates whether FICA, which is Social Security and Medicare, will be deducted before computing our state tax. This one indicates whether the tax tables are cumulative. The last one indicates whether all of our withholding amounts should be rounded to the nearest dollar. We can now enter our tax calculation tables for this state. I'm going to insert a calculation table for single people. Now, many states have just one calculation table. If this is the case, just enter one table and call it Oklahoma withholding. The standard deduction box will look different depending on the answer that was given in the previous screen. If in the previous screen it was indicated that the standard deduction was a percentage of gross, then we are asked to enter an additive amount, a percentage rate, and a minimum and maximum amount. As an example, the standard deduction might be defined as 5% of the person's gross pay, with a minimum of $1,200 and a maximum of $2,500. By making the proper entries in these fields, you can set up the standard deduction to behave in this way. Your state may also allow a standard tax credit. You may need to consult your state payroll withholding booklet for instructions. If in the prior screen standard deductions were defined as a flat dollar amount, this window will only ask for the amount of the deduction and the standard tax credit. On the right-hand side, we enter the amounts of the personal exemptions. In most states, if there is a personal exemption amount, it's the same amount for all exemptions. In some states, however, the first exemption has a different value than the second exemption, and sometimes the third and additional exemptions as well. Now we'll click the Tax Calculation Table tab and enter our progressive tax rates for this tax table. Just like we saw in the federal table setup, the tax table can have one or more levels. Enter the minimum amount and the tax rate for each step of the tax table. If the table is just a flat rate, such as 3%, just enter one line item in the table with a minimum of 0 and a tax rate of 3%. We'll click OK for this tax table and move on to the second tab, which is called Unemployment and Disability. In this tab, we can enter state unemployment insurance information. The first field asks for a federal unemployment credit. Federal law mandates that employers must pay 6% of an employee's wage to provide unemployment benefits to employees who are out of work. That 6% was entered earlier in the federal setup window. Traditionally, every state has been able to subtract 5.4 from that percentage, leaving only 0.6% that must be accrued and sent to the federal government. This 5.4% federal unemployment credit is stored in the software and can be entered here. In recent years, some states have lost the ability to claim this full 5.4% reduction. These states are referred to as credit reduction states. If the state we're entering is a credit reduction state, the percentage we enter here will be smaller than 5.4%. Consult the documentation for the Federal 940 form to see if your state is a credit reduction state, and enter the appropriate federal unemployment credit here. Next, we enter a GL account number for the amount accrued by the employer. In cases where there is an employee-paid portion of state unemployment, you'll need to provide an account number here as well. Now we'll enter the percentage rate and wage limit for the employer and employee-paid portions of state unemployment. In the right-hand box, we can set up disability insurance. This insurance is specific to California and a few other states. We can enter the GL account number, the wage limit, and the percentage rate for disability insurance. On the Workers' Compensation tab, we are able to enter information about different workers' comp rates that we are charged in this state. First, we enter the employer and employee general ledger accounts. In most cases, there will be no employee-paid portion. We can then enter a wage limit. Once a person's annual earnings go beyond this limit, workers' comp stops calculating for that employee. We can now specify a calculation method. In many states, workers' comp is calculated by multiplying the rate times the employer's entire gross wage. If this is the case, select the first radio button. In some cases, overtime pay is excluded by multiplying the total number of hours worked times the regular rate to arrive at an adjusted gross amount. Therefore, the premium portion of the pay is excluded from the gross before calculation of workers' comp. This is method 2. The third method excludes overtime hours altogether by taking only the regular hours times the regular rate to arrive at an adjusted gross for calculation of workers' comp. The fourth method is workers' comp that is based on a dollar amount per hour instead of a percentage of the person's gross. There are also some states, including Oregon, that require an additional hourly workers' comp to be calculated. This can be accessed through the button at the bottom of the screen. Once these general setup items have been completed, we can enter rates for specific workers' compensation craft codes. The workers' comp craft codes should have been entered previously through the payroll system. When we click the Insert button to add a new rate, the system will bring up this window where we can select from previously entered workers' comp craft codes. We can enter the Oklahoma code number for this craft here. In the system, we are allowed to specify our own coding scheme for the workers' comp craft codes. However, each workers' comp insurance company has their own number for each of these different rates, so we've allowed for the entry of the insurance company's code number here. We can then enter the employer-paid rate and, optionally, the employee-paid rate for this craft. We can enter as many different rates as we have authorization to use from our insurance company. Now let's move on to the General Liability tab. This tab is identical to the Workers' Compensation tab, so we won't describe it here. But General Liability insurance works the same as the Workers' Compensation insurance. We now move to the Local tab. For all states we enter, we have the ability to enter tables for local taxation. We create a locality by clicking the Insert button and entering an ID number for the locality. For example, if there were local taxes calculated in Oklahoma, I might type in TUL for Tulsa. I'll enter Tulsa as the locality name and give it an identification number. Now we can enter the GL account to which this local tax will be withheld. We can also indicate whether or not this table is cumulative. In most cases, it will be. Now we indicate what the local tax is based on. It can be based either on the person's gross pay, the calculated federal withholding, or the calculated state withholding. We also have an optional checkbox, which we use on rare occasions when the person having local taxes withheld indicates that we are not to withhold any state taxes. On the right-hand side, we can now enter the tax withholding table rate, or rates. We can now save our new locality, and all Oklahoma localities will be shown in the list box. After timesheets have been posted and paychecks generated, you will at some point be responsible for paying the withheld state taxes and accrued liabilities to state and local government entities. This is usually accomplished by creating accounts payable invoices that relieve the appropriate accrual accounts and pay the proper authorities. The system can generate these invoices automatically during timesheet posting. All you have to do is go to this tab and specify which vendor and accounts payable invoice batch will be used for creating these invoices for state tax withheld and workers' comp, general liability, unemployment, and SDI amounts withheld and accrued. At this point, we can close the Payroll Options window for state and local tax setup. And this concludes this payroll setup